Hey, what's going on, everyone? Christian Carter with Radius, and today answering another question from the top 10 most Googled questions in 2022 by potential home buyers. And today's question is, what are the different mortgage loans that are available? And this is actually kind of a difficult question to answer, but we're going to try and do it anyway. All right, so to start off here, I want to talk about two different things. I want to talk about government-backed mortgages and then non-government-backed mortgages, okay? So the government-backed mortgages, which is kind of just like it sounds, these mortgages are either insured or guaranteed by the federal government. We've got FHA, VA, and USDA. So the FHA, very, very popular mortgage program, very, very good. It only requires a 3.5% down payment, right? Which is awesome. And with the FHA mortgage, you can see the underwriting guidelines are a little bit not as strict, right? So you can have lower credit, you can have a higher debt to income ratio, a little bit of leniency in there, right? And then next up, we have the VA loan. Must be a veteran in order to get the VA loan, because of course it's from the Veterans Administration. And there's a 0% down payment with the VA loan, which is absolutely awesome, right? Same thing with the USDA, which is obviously United States Department of Agriculture. They do not require a down payment whatsoever, so 0% down payment in there. However, in order to use the USDA loan, the property must be located in a rural area. All right, now let's talk about the non-government backed mortgages, right? And we just have two here that I want to highlight, right? We have conventional and then we have jumbo mortgages. So essentially, conventional loans are anything that are not government backed, right? And that follow Fannie and Freddie guidelines. Don't get too worried about that, the Fannie and Freddie guidelines. Just know that essentially these conventional loans are at the conforming loan limit, which is set by Fannie and Freddie, and they are not government backed, right? So if you're not going with a government backed mortgage and you're not going with a high priced jumbo mortgage, 9 times out of 10, you are probably going with a conventional mortgage, right? And these are very, very popular. All right, jumbo loans, just like it sounds. Jumbo loans are for really high priced properties, right? And they do have stricter underwriting, right? A lot of times you have to have a lower debt to income ratio and things like that. But definitely stricter underwriting. And basically anything jumbo is when the mortgage loan amount is over the conforming loan limit, right? So if it's too expensive, if the mortgage loan amount is too high to go conventional, you're going to jump right into jumbo territory, all right? I hope that helps, right? That's the type of mortgages, right? Government backed and then non-government backed. Now we're going to hop over to the other side of the screen. And essentially what you can do here is these are other mortgage types and other mortgage options that you can use in conjunction with these loans, with these mortgages, okay? Don't worry about it. We're going to go through and explain it. All right, so first off, a construction loan. So construction loan, renovation loan, which is next. Very similar. I actually have a great video. Feel free to go back and check it out on that. So here's a good example of when we combine this side of the screen and this side of the screen, right? So with a renovation loan, a very, very popular renovation loan is the 203K, right? And it actually is the FHA 203K. So here's a great example of combining a renovation loan with the FHA product, right? However, you can do this, you can combine a renovation loan with a VA loan, you can combine it with a conventional loan, so just know that you can combine these two sides of the screen, right? Hope that makes sense. All right, next, home equity line of credit, also shortly referred to as a HELOC. These are getting really, really popular now because of the higher interest rates and things like that. And then a home equity loan is essentially the same thing as a cash out refinance, right? These two actually need their own video, but essentially think of a home equity loan, same thing as a cash out refinance, right? And again, you can combine that cash out refinance with a jumbo mortgage. You can do a cash out refinance for a conventional loan, for a VA loan, right? So you can combine those two things. All right, and then next up on the screen is reverse mortgage to kind of tap into the equity that they have in their property, right? So these are some second mortgage options that are really, really cool, and I just wanted to hit on real quick, right? So a piggyback loan. This is very, very popular for people who want to avoid paying private mortgage insurance, right? So I'll give you a quick example of how a piggyback loan works. Let's say you're doing a conventional loan, conventional mortgage, right? You're putting 10% down as a down payment, and then you take an additional 10% on a piggyback loan and combine that with a conventional loan, right? So you're actually putting 20% down on that conventional mortgage so you don't have to pay private mortgage insurance, right? 10% of your own money for the down payment, 10% from a piggyback loan, combine those together, 20% down payment, and now we don't have to pay private mortgage insurance. That was a very simplified version or example of a piggyback loan, but they are really, really awesome. All right, next up here, and what's even cooler than a piggyback loan is some of these down payment assistance programs, right? So as we know, the biggest barrier to home ownership is the down payment 9 times out of 10. So I want to give a quick example of how these down payment assistance programs work. Let's take the FHA, for example, right? FHA, as we know, requires a 3.5% down payment. So you want to buy a new home using the FHA program. However, you don't have a 3.5% down payment, no problem. You can use some of these down payment assistance programs to get a second mortgage for 3.5% of the down payment, right? It's very, very cool. So essentially, it allows you to not make a down payment. It allows you to finance 100% of the property because FHA requires a 3.5% down payment, which you will get from some of these down payment assistance programs. Like I said, very, very simplified example of that, but these are really, really awesome. All right, I hope that helps. Again, very, very difficult question to answer. What are the different types of mortgage loans available? Well, there's like a million, right? But we just covered the basics here. I just want you guys to remember government-backed mortgages and non-government-backed mortgages. And you can also combine a lot of these other mortgage types with those mortgages. I hope that helps. As always, hit me up with different ideas on videos. I do love making these. Any questions, of course, reach out to me anytime. And other than that, have a great day, and I will see you later. See ya.